Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the low time frame bearish impulsive scenario, where we still expect a move to the downside in either a wave C or a wave 3 after wave A or 1 and 2 or B are already in. In this scenario, the most common target for a wave C, which is then a 5-wave structure to the downside from this high of B over here, is between the 1 and the 1.236, taken with the trend-based fib extension tool from the high to the low of A to the high of B, where you can see this target is between 28.1k and 27.5k. What is not that nice about this target area is that it does not really have any confluence with one of my support boxes, which are the blue boxes that you see on the chart. The one right below is sitting between 27.4k and 26.8k, which is a very big support. Now, of course, price can wick inside this area and then range around the 1.236. That would be absolutely fine for then a continuation to the upside. The more bearish scenario is that we have then a wave 3 to the downside, which is an impulsive structure, and then a wave 1, 2, then you expect another 5-wave move in wave 3, 4, and eventually 5, where the most common target for wave 3, and usually the target that you like to see hit, is the 1.618 pulled from the same pivots from the high to the low of 1 to the high of 2, sitting at 26.6k. If we zoom in to this structure over here, it is important to note that the 0.382 acted as resistance over here, very nicely respected, taken from the high to the low of wave 1 or wave A, which is a common target for a wave B and a rare target for a wave 2. Then more locally, if we are looking for an impulsive structure to the downside, this over here has to be the first structure. So we're then looking at a wave 1, 2 continuation, right? Because this is the high. So we have a 1, 2, 1, 2, and then look for a bigger 3 to the downside. Now, usually a double 1-2 scenario preferably is a 1-2-1-2 continuation, where the second one takes the low of the first wave 1, which clearly is not the case over here because this low is lower than this one over here. So that lowers the probabilities a little bit. And also we have an inefficiency over here, a gap. And usually when you see price ranging right around this gap for so long instead of hitting the gap and rejection, it is quite likely for price to fill this gap towards the upside, and therefore you can see the dotted line moving towards the upside as well, as this is something I still keep my eye on, where the 0.786 is in confluence basically with the high of this gap and the 1-hour order block that we have around 30.2k. So this is a very interesting area indeed. If we go to the low time frame, more bullish bearish scenario, eventually we expect more downside, is that this move to the downside is a wave A, we're looking for a 3-wave B and then a wave C to the downside. So in this scenario, the correction will take a little bit longer. So this is not the high of the correction and we expect downside for much lower prices, but we expect at least another move up to take this double top, if not test the support or the resistance areas that we have above price, where one of the resistance areas, this blue box, sitting between 30.4k and 30.6k, and one above over here between 31.1k and 31.3k. In this scenario, we are then looking for an expanding flat in a wave B, which is a 3-wave structure, and then a 3-wave A, 3-wave B, before then a wave C towards the upside, which is an impulsive move to the upside. So you want to see volume coming in and 5 waves to be generated. Now, in this scenario, the most common target area for wave B and then an A, B, C is between the 1.236 and the 1.38, sitting between 29.3k and 29.1k, which is just above the support area that we have around 29k. Now the 1.618 is a rare target, but a target nonetheless for maybe a dip in this area and then eventually moving towards the upside. You do see that one of the lines over here is moving straight towards the upside, and that is of course just a in-case scenario where we do have resistance above price over here, which is the white box as mentioned. It's the 786 1-hour order block over here filling the gap, so that is important resistance between 30.1k and 30.3k. But if price is going to push for bullish CVD divergences more locally or show signs of continuation, then of course this move to the upside can continue, and then it is important to observe how price is moving to the upside, because if we are looking for a wave B, we expect a 3-wave structure to the upside and then a 3-wave structure like this, but this can also then potentially mean the low is in and we get continuation. If volume is increasing, price is looking very impulsively, then we have to take into account that we might go for new highs. But of course, it is very early to tell, and I update you guys 3 times a day. So we'll see what happens, right? More locally with the price action over here. As it stands now, looking at this range over here, the support or the resistance area, the main resistance area is simply this white box, and we have to observe and wait what happens there, which is then also, if we go to the micro scenario, my main area of interest. Now we were looking for this scenario over here, moving up. This is from the previous update, right? Moving up, eventually moving down, take the double bottom before then a move towards the upside. Now we got that move to the downside, taking this double bottom very nicely indeed. It wasn't a swing failure pattern. We closed candles below, but it was closing inside the support area that we had over here, identified on the chart. Very, very nice for then a bounce to the upside. Of course, we don't want to see price returning to this area, as then the probabilities increase for price to continue to the downside. But what we now have to the upside is a triple top. We have high number 1, high number 2, and over here high number 3. And if you arguably think this is high number 4, you have a quadruple top, you can say. But at least there's a lot of liquidity hanging over here, and the probabilities of at least moving towards the upside to take these highs is quite high. But if we go up once more, I think the probabilities are also high to just fill this gap, fill the remainder, go towards this resistance area, right? That starts at 30.1k, and then wait and see how price is gonna react around this area. Of course, as this is a liquidity area, price can wick above, close below, and move to the downside again, calling it for a swing failure pattern, but that is still wait and see. I think the probabilities in general are at the moment quite high to fill the empty gap. Of course, price moves up in waves. We do have a bit of support over here. If I open the high time frame levels, we have a daily at 29.8k, which is fine. That's good support. And always in general, a good support to keep in mind is the golden pocket area, which is actually just below the daily. And if I open all the fibs, you can see the daily and the 0.5 are in confluence with one another. Currently price bouncing on the 0.236. So even if it goes towards the downside just a little bit, as it is weekend, who knows, you know, ranging throughout the weekend as it has been doing here for a while now, at least we know potential support and we know potential resistance towards the upside. But preferably we're going to see a bit of a move towards the upside, and I don't care if that's directly or first a move to the downside and then a move to the upside. If we look at the CVD divergences, we have bullish CVD divergences over here, where the target is then this high. That's the main target. The moment this one gets hit, we say the CVD divergences have played out and it's neutralized. We also have bearish CVD divergences. Now the bigger one that you see over here between this high and the lower high came or was on the chart second. So the first one that appeared was the bullish CVD, and only after price moved to the upside came this bigger bearish CVD on the chart. Now, from a statistical point of view, the preferred CVD is the one that appears first, meaning this bullish CVD currently has a higher probability of playing out than the more local bearish CVD divergence. However, what for me is more important than this bearish CVD divergence is actually the more local one. And this is also something that I mentioned in the updates section in Discord over here, where I said the biggest CVD divergence comes after the bigger bullish one, as just explained. So, okay, that works, right? But based on probabilities, the first divergence has a higher probability. But I say above, the local divergence are more relevant for me. We got some bearish CVD divergence, meaning this one over here between this high and the lower high is more relevant to me than the bigger one. Now, as it stands, it almost played out because the target for this more local bearish CVD divergence is this one over here. And of course, we do have bullish CVD divergence, but seeing more local bearish CVD divergence, CVD divergences is important for potential trade management, of course. So, well, it almost played out, and we'll wait and see how that is eventually going to develop. If we then look at the probabilities, then on the low time frame, I am still looking in general for a move to the downside in both of these scenarios I mentioned. So either wave 1 or 2, which for me has a bit of a lower probability at the moment, and potentially seeing another high towards the upside to also take the double top over here, hit this inefficiency, potentially filling this whole inefficiency to go to 31k, right? That would be actually quite nice for then a move towards the downside in a 3-wave structure. So this is definitely something I keep my eye on. And on the micro time frame, well, currently probabilities, I suppose, are higher for price to take the triple top, as we are basically in a range and therefore range trading. So yeah, we do have the bullish divergences, high 1, high 2, high 3, but of course everything moves in waves, and I think the bearish CVD divergences are going to play out that we have locally in just a second, or it may have already been almost, at least when recording this video. So yeah, the triple top is definitely interesting, and also the wide target area. If price now moves down very impulsively, keep an eye at least on the daily over here for potential support, and we observe price throughout the day. The next video will be the high time frame macro update. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.